Everyone thought car prices would finally crash. First in 2024, then in 2025, but here we are in 2026, and the average used car still costs more than a brand new one did 5 years ago. So what's going on? Is the used car market about to collapse? Or are high prices here to stay forever? Today, we're breaking down the real data, the hidden forces, and what smart buyers are doing right now to stay ahead. Welcome back to Car Hacks and Money, where we dig into the truth about cars, cash, and the crazy economy behind them. If you're thinking of buying, selling, or just trying to survive the modern car market, this episode could literally save you thousands. Because what is happening right now in the used car world isn't just a pricing issue. It has a complete shift in how Americans buy and own cars. Let's start from the beginning. The moment everything changed. Back in 2020, when factories shut down, car production basically stopped. At the same time, demand for cars skyrocketed. People avoided public transport, moved to the suburbs, and wanted their own space. So you had a perfect storm. Short supply, massive demand, zero new inventory. Dealers suddenly realized that used cars, even 3- or 4-year-old ones, were gold. By 2021, prices went crazy. A used Toyota Tacoma was selling above MSRP. A 3-year-old RAV4 cost more than a new one. It was madness. And the problem? That temporary spike never really ended. Fast forward to 2026. Those missing cars from 2020 to 2022 are still missing. Because fewer new cars were built, there were fewer trade-ins, fewer lease returns, and fewer affordable used cars entering the market. That means supply hasn't bounced back and may not for years. Even though interest rates went up, car prices didn't crash. Why? Because there just aren't enough good used cars out there. Think about it. A normal car market cycles vehicles every 3 to 4 years. But now, the average American keeps their car 12 years. People aren't selling. Dealers can't restock. So when a clean used SUV hits the lot, it sells instantly, often above asking. Here's what most people don't realize. Even if prices level off, the total cost of owning a car has exploded. Insurance premiums are up over 30% since 2023. Loan interest rates have doubled. Maintenance costs, especially for used EVs, are unpredictable and expensive. So even if you get a deal on a used car, you're still paying more overall. That's why many experts say we're not seeing a bubble anymore. We're seeing a new baseline. Cars have simply become more expensive to build, fix, and finance. Some buyers thought, forget used cars, I'll just get a new one. But guess what? New cars haven't really come down either. Manufacturers shifted strategy during the pandemic. They realized they could make fewer cars, charge more money, and still sell every single one. Why go back to mass-producing cheap cars when high-margin models make more profit? So entry-level cars are disappearing. The average new car in America now costs around $47,000. Affordable options like the Chevy Spark or Toyota Yaris? Gone. The result? Used cars stay valuable because there's no cheap new alternative. Behind the scenes, automakers are actually managing scarcity. Instead of flooding the market, they're using data and AI to control production in real time. This keeps supply tight and prices stable. In other words, the shortage isn't always accidental anymore. And here's the kicker. Leasing companies and fleet owners are doing the same thing. They're holding on to vehicles longer to maximize resale value. So the same system that inflated prices is now designed to keep them there. Even if you find a fair price, the financing side will hit you hard. In 2026, average used car loan rates are between 9% and 12%. That means a $25,000 car could cost you $35,000 plus over the life of the loan. And since most buyers focus on monthly payment, not total cost, they don't notice how bad the deal really is. Dealers know this. That's why they advertise low monthly payments, not prices. So even if prices stay flat, borrowing keeps getting more expensive. Let's bust the biggest myth right now. A full-on used car crash like housing in 2008 probably isn't coming. Why? Because cars aren't overproduced like houses were. Supply is genuinely low, not inflated. And even with high interest rates, there's still real demand. Sure, some overpriced models might dip like luxury SUVs or EVs with weak batteries. But mainstream models, like Toyotas, Hondas, and small trucks, are likely to hold or rise. In other words, the market won't collapse. It'll just normalize slowly. So what can you do if you still need a car in 2026? Here are the real hacks. 1. Buy what's unpopular but reliable. Think sedans instead of SUVs. A Camry or Accord can save you thousands over a RAV4 or CR-V2. Expand your search radius. Prices vary wildly by region. A $25,000 car in California might be $19,000 in the Midwest. 3. Skip financing traps. Pay cash or use short-term loans if you can. Avoid anything beyond 48 months. 4. Don't chase model years. A 2018 with 70,000 miles might be a better deal than a 2021 with 40,000, depending on maintenance and ownership. 5. Watch insurance costs. Some models have doubled in premium rates. Always get a quote before you buy. EVs are a wild card in this story. Early electric cars are tanking in value, mainly because of battery degradation and expensive repairs. But new EVs with long-range solid-state batteries? They're holding value better than before. So we're seeing two extremes, old EVs becoming worthless, and new EVs becoming long-term assets. This split makes it even harder to predict where the crash will actually happen. The days of flipping cars every 3 years are over. Cars are now long-term investments, like homes or tech devices. Buy smart, maintain well, and you'll win. Buy emotionally, overpay, or ignore financing, and you'll lose thousands. That's the new rule of 2026. Here's the truth. Even when the math doesn't make sense, people still buy. Because cars aren't just about transport. They're about freedom, image, and control, especially in uncertain times. And car companies know this. That's why they've turned vehicles into status tech. Big screens, AI systems, autonomous features. They're selling emotions, not economics, and it's working. So, will used car prices ever go down? Yes, but not the way most people think. Prices will soften, not crash. We'll see small dips as older cars flood in and EV technology stabilizes. But the cheap car era is gone. Cars will keep getting smarter and more expensive to build, insure, and maintain. By 2030, a $20,000 car might be as rare as a flip phone. If you already own a car, maintain it like gold. Keep up with oil changes, detail it, and protect resale value. If you're buying, time your purchase end of the quarter, private sellers, or tax refund season are best. And always remember, the best deal isn't the cheapest car. It's the one that costs you the least over time. The truth is, the used car crash everyone's waiting for probably isn't coming. But if you understand how the market really works, you can still win big because knowledge is leverage. And that's what we do here, turning car chaos into smart money moves. This is Car Hacks and Money. Hit subscribe, and I'll see you in the next one.